Welcome to Las Vegas Real Estate Now, where we believe in the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld of the Brown Blankfeld Group, selling homes in Southern Nevada since 1988. To bring you the 3 E's, we not only share our experience and knowledge, but that of our expert contributors. We are very proud to be part of the Real Estate Radio Network. Like them, we are dedicated to delivering timely, balanced truths on market conditions. Please stay tuned. We'll be back in just a moment. With us in studio right now, we have Steve Schauer from New American Funding. He's been doing loans here in Southern Nevada for 21 years. Steve, welcome.
Hello, thanks for having me.
I wanted to talk about the different types of loans with regard to the buyer. There's 3 general categories of buyers. There's the people who are buying to live in it.
Correct.
There's the people who are buying purely for investment's sake.
Correct.
And then the third one is those people who are buying a second home, perhaps. Like
a vacation property.
Right.
Yes.
What's the impact on mortgages?
It's basically a down payment difference. Down payment and an interest rate. So our lowest down is if someone's going to occupy the property. It's obviously less risky of a loan.
Right.
So therefore, we'll do as little as 3% down payment. Actually, with a VA loan, like we talked about plenty of times, it's 0 down.
We're still seeing individual buyers picking up a second or third home purely for investment's sake. Shelley, that was your strategy for years and years and years.
Yeah, I've done it for years. At one time I had 30 rentals. We have no retirement as real estate agents, so you have to figure out what your retirement's going to be.
I'm just not going to retire. I just figured that out.
The oldest living real estate agent.
Yeah. So what's the minimum down payment required for an investment property?
20%.
Okay.
And that's a misconception with everybody out there, because I always hear, oh, it's a conventional loan, I have to put 20% down payment, and that's only if it's an investment property.
Did that change? Because it seemed to me a few years ago it was 25% down if you've never had an investment property.
Correct. It's down slightly, 20%.
No matter what loan it is, what type it is, the bigger your down payment, the better the interest rate for the most part. You're reducing the risk for the lender because you've got a bigger stake.
Well, it's actually the reverse of that theory, though. The theory is interest rates start at the standard good rate.
Okay.
It's expected to have good credit, a good down payment. Then they just go up from there. Everybody says, oh, it's a low amount, so you don't need to do as much paperwork.
No, it's the same.
And same with the cost of the loan and everything. And in proportion, the costs seem higher on a lower loan amount to a lot of people because a lot of costs are fixed.
Example, an appraisal.
That's a great example. Appraisals are about $450, which is almost 1% of a $50,000 loan,
Right.
and are less than 0.1% on a $400,000, or
Yeah.
roughly that.
What about the term of the loan? Does that affect the rate also?
It does. So we have availability to do a 10-year all the way up to a 30-year loan.
Okay.
And the 15-year and the 10-year are very appealing to a lot of people. I like that loan a lot. A lot of people think that a 15-year payment would be double that of a 30-year, and it's never double. Maybe a couple $100 more, but you pay that much faster.
Yeah.
Gaining equity much faster on that. But we have every option in between. So if someone wanted to do a 22-year loan, they could do a 22-year loan.
I never knew that.
That's news to me.
Can you do a 40-year?
It stops at 30, unfortunately.
In Japan, the typical mortgage is like 40 years. In Canada, it's interesting. They don't have fixed rate mortgages
They
at
don't.
all. So we got to be really pretty pleased with the fact that you can lock that rate down, know your home cost for the next 30 years, and be done.
But there's no prepayment penalty nowadays on any mortgage. So someone can take a 30-year loan, pay additional per month, and it pays the loan off much faster.
Steve, thanks so much, man.
Well, thank you for having me again. I appreciate it.
Thanks for listening to Las Vegas Real Estate Now. Please tune in every week and help us heal the Southern Nevada market one home at a time.